Today I want to talk about how an AMC buyout may have just been confirmed by some very specific wording in their recent agreements. This buyout, combined with the AMC conversion, the reverse split and the change in CUSIP numbers, is just what we need to cause the squeeze. I also want to talk about how the shorts are scrambling for liquidity because they are finished. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, Dave Murphy tweeted saying, "I've been tweeting a lot about a business combination between AMC and Antara, or maybe more specifically, AMC and Disney." He said today's filing finally contained the word I had anticipated. Let's see it in the thread below with prior Antara deals where a business combination was the key word. So he said that recently there was a company called Collective Growth that merged with Innoviz. So this is for an entry into a material definitive agreement for a business combination agreement. So it says that Collective Growth Corporation entered into a business combination with Innoviz Technologies, Hatzata Merger Sub Incorporated, Perception Capital Partners LLC, and Antara Capital. And on top of that, Great Southern Homes Incorporated merged with Diamond Head Holding Corporation, which obviously required a business combination agreement as well. Slam Corporation did end their merger talks with Panini SPA, but did also previously have a business combination agreement featuring Antara Capital. The earliest and only time that AMC completed a business combination was back in 2017 when AMC acquired Nordic Cinema Group, which became a subsidiary of Odeon. At the time, AMC obviously had to propose, you guessed it, a business combination agreement with Nordic Acquisition, or specifically with Odeon. Now you may have seen in AMC's recent filing, it says the amended and restated certificate of incorporation expressly states that the company, aka AMC, has elected not to be governed by Section 203 of the Delaware General Corporate Law, which prohibits a publicly held Delaware corporation from engaging in a business combination for at least a period of 3 years. Basically saying that AMC does not want to be prevented from entering into a business combination agreement for at least 3 years. In fact, they'd likely try and enter one within the 3-year time frame. Now this is really interesting because AMC had to specifically amend and restate their certificate of incorporation to specifically not be governed by Section 203, preventing them from any business combination. The fact that AMC had to go to such lengths just so they could enter into a business combination likely suggests that is exactly their plan. Dave Murphy said today, "We were given a filing which contained the key word that I was looking for, business combination, and from that we can form a hypothesis based on the Ape prospectus with the keyword highlighted." Over the last couple of weeks, Antara has obviously purchased a significant amount of Ape and AMC shares and is therefore already partially on the way to performing that business takeover. Now, as we saw from some of those previous agreements, Antara doesn't specifically do business combination takeovers. They basically kind of help out in a takeover situation. For example, it wasn't Antara taking over Collective Growth Corporation or taking over Innoviz Technologies. It was Collective Growth Corporation taking over Innoviz Technologies, just with Antara's help. Therefore, it's likely that Disney or potentially another streaming service is planning to take over AMC and needs some help, aka from Antara. Antara has obviously purchased all of these Ape and AMC shares and has agreed to vote yes at the general meeting to convert Ape shares into AMC and perform a reverse split. Now this is obviously a good thing because it means we get that change in CUSIP number just before Disney comes along, swoops in and performs that buyout. Now obviously we know the shorts likely have to be returned and cancelled during that change of CUSIP number, and therefore it leaves Disney with perfect grounds to perform that business acquisition with no shorts left. And obviously if the shorts haven't closed out by the time the CUSIP number changes, they're forced to close out just before the acquisition because obviously AMC would be going private. And therefore it's likely we'll see AMC running up and squeezing before AMC is delisted due to the Disney business combination or buyout. Also, if you haven't already, be sure to sign up to Moomoo. They don't engage in payment for order flow, they're very easy to use, it's very customizable, they've got tons of technical indicators, and it's entirely commission-free trading. Right now you can currently get 15 free stocks when you sign up, worth up to $2,000 each, and for the holiday period they're currently holding a $60,000 giveaway sweepstake. All you have to do is sign up using the link in the description below. Dave Murphy did say it's possible sure that Antara is just lending AMC a lifeline, but if that were the case, a vote on conversion and a reverse split typically wouldn't be dependent on such a deal. Obviously, part of Antara acquiring so many Ape and AMC shares was very dependent on them voting yes at the next meeting for the AMC business combination and the reverse split. I think it would obviously be perfect if we see this business combination and the reverse split just before an acquisition where all shorts have to close out. That would obviously give Disney a very accurate share count so they know exactly how much money they're paying per share during that buyout. Disney obviously doesn't want any synthetic shares in existence at the time of the buyout because obviously Disney only wants to pay enough money to cover the existing shareholders. For example, if Disney is paying $30 per share and there's 150 million shares in existence, that's $4.5 billion. But obviously if Disney is paying $30 per share and there's somehow a billion shares in existence due to all of those synthetics, they'd have to pay $30 billion. Disney obviously only wants to pay $4 billion and not $30 billion, and therefore all of the synthetic shares must be closed before the combination. Now on top of that, you may remember that Adam tweeted back in August saying, "Do you blindly fear dilution?" He said, "You miss crucial facts." In January 2021, AMC issued shares. AMC's share price soared. Back in May and June of 2021, more AMC shares were issued, and again our stock soared. He said, "We stopped selling shares in July 2021 after our vote, but AMC started its long fall." He said that Apes make AMC stronger, which obviously enabled them to enter into this business combination deal with Antara and with Disney. And on top of that, Apes also makes AMC stronger because it means that AMC gets to change its CUSIP number during the AMC Ape conversion. The conversion, reverse split, and the change in CUSIP obviously gives Disney the perfect layup to make the acquisition with no synthetic shares in existence. And I really think that is how Ape really makes AMC stronger, because it enabled them to perform this business combination or this buyout. And to show just how much the shorts are scrambling right now, you may have seen this tweet from Thomas Thornton. That basically means that retail investors cannot use margin when trading Tesla stock. Obviously today was a massive down day, basically meaning that TD Ameritrade halted retail investors from shorting Tesla on margin. Obviously, these hedge funds and TD Ameritrade don't want the Tesla stock falling any further because of how significantly it's fallen so far over the last few weeks, and obviously it could have potentially caused some massive margin calls. And that's why they turned off the day trading buying power, aka the margin for Tesla stock, so that retail investors couldn't short the stock any further. You may have noticed after this tweet was made and after TD Ameritrade turned off the margin power for shorting Tesla stock, the Tesla stock itself started to slowly creep up. And on top of that, something else that actually ties into the Tesla margin being turned off is this tweet from Tendy Barron. He said, "Remember that Chinese IPO stock, HKD, the stock that ran from $12 to $2,555 in the end of July and the start of August. He said it's running yet again today on the 5th of January 2023. Today it peaked over 100% intraday." And as Spence tweeted, he said HKD pumping and TD Ameritrade turning off the day trading margin power for Tesla stock. He said, "Tell me you've got a margin call coming up without telling me you've got a margin call coming up." Clearly these hedge funds were desperate to pump HKD for more margin and to try and halt Tesla from falling any further. Obviously some hedge funds out there were just about to experience a margin call and then had to desperately pump these stocks for extra liquidity. And on top of that, something else I found very interesting was this tweet from 741 Trey. He said, speaking of Loop Capital, which is the company that helped take HKD public, he said, "Where is Anthony Chukumbra?" He said the master stock analyst is no longer listed on their website. He said, "I wonder if it has anything to do with this cease and desist order Loop received from the SEC back in November." Very interestingly, Loop Capital Markets did receive a cease and desist letter from the SEC, obviously just after they listed the HKD stock and helped pump it. So it seems whoever created these Chinese IPO stocks that massively ran to create margin for these hedge funds is actually now being investigated by the SEC. And this all seems to be happening at a perfect time. This is all happening at a time when Gold Telegraph has just tweeted saying breaking news. Credit defaults are set to more than double in Europe this year to levels approaching the worst days of the global pandemic. Basically, many companies and hedge funds in Europe are expected to start defaulting on their debts, which obviously comes at a time when the market is crashing. These Chinese IPO stocks are being pumped for any cash grab they possibly can, especially at a time when AMC is just about to go through a buyout. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.